Market Traders. Today we're going to take a look at UPS, United Parcel Service, a very popular stock, especially this time of the year. Around the holidays where shipping typically increases, and certainly been the case this year in the major shippers, Amazon, FedEx, UPS, with everybody wrapped at home in their bubble, ordering goods online has really created an unprecedented demand for shipping, delivery, and courier services. But now we're looking at a time of the year for UPS in particular where UPS has a negative bias to the downside. This is based on 7 years of data. You can see here with our smart market scanner, we have a bearish trade setup with a start date on or around 12/8. And last almost 2 months here, ending on or around February 1. Average profit has been 8%. That's around $8 or so to the downside per 100 shares. And you can see that we've only had 2 losing trades here, which were very modest over this time period, especially when you compare that to the winning years. We had about -0.3% here in 18, and then last year at this time about 0.9% in 2020. So while all that is good, valuable, solid data, we like to look at the chart and really analyze from a bigger picture point of view to see what the charts are looking at. This is a weekly chart, and this is an area of significance where we last broke out, created these highs, prices held when we retraced back in October and November, and now we're trading inside this range. But we are putting a head and shoulders top. So the head and shoulders top projects a movement from these highs down to these lows, and then a move down from that neckline. You see that is approximately a move from 155 or so down to about 135. So we're looking for about a $20 move. And you'll notice that that coincides with a retest of this last major swing high put in January 2018. So we drill down to a smaller time frame. We also want to see that confirmation. Notice that while we're making higher highs here, we had a high and then a higher high. We have divergence here. Our divergence or momentum indicators are pointing lower, making lower highs, lower highs, lower highs, suggesting that momentum may be waning. Now, another thing that we can do is just use a simple trend line tool, and aggressive traders consider getting short here on a break and retest of that trend line. So if we break this long-term trend line that's held all the way back to the May lows here, if we break the trend line and retest, or i.e. that trend line holds, you could consider jumping in to the short side. If you want to play actual head and shoulders top pattern, you'd be looking for a break of this neckline, which occurs at the 1 double nickel level, or $155. We'd like to see that area hold. Then we can jump into the short side and look for a move down to 135. How do you play this? Well, you can sell UPS stock, you can buy puts or put debit spreads, or sell out of the money call spreads, which allows you to play the move and not have to be so right on the trade. So we've got a really good potential here. Potential $20 trade on a short with an 86% win rate over the last 7 years. Add that to your watch list. Good luck, good trading, and we'll see you on the next update.